The return on investment for the vast majority of investors is substantially worse than the stock market as a whole. 2 videos ago, we looked at how the behavior of market timing, or trying to pick specific stocks or funds, accounts for about half of this gap. The rest we give away as costs. Last video, we introduced the idea that the best and lowest cost way to buy the whole stock market is with index funds. This is because the costs of actively managed funds make them very unlikely to beat the total stock market index funds. Only a small percentage of active funds outperform the total stock market index funds, and you can't guess them in advance. Moreover, that probability gets lower every year. 3 costs that I want you to be very aware of are sales charges, operating expenses, and taxes. A sales charge on purchases, or load, is exactly what you'd expect. If there's a 5% sales charge, you write a check for $10,000, but only $9,500 gets invested because $500 goes to the salesman. Sometimes a back-end sales load is deducted from the redemption proceeds instead. Too often, brokers or commissioned agents actually think they are trying to help you by recommending to you recent top-performing actively managed funds. This is bad advice. It makes other people wealthy instead of you. When you can, buy from one of the big discount brokerage houses instead and look for the low-cost, highly diversified index funds without these sales fees. These kind of funds are called no-load funds or marked NTF for no transaction fee, although there might be a footnote that restricts this to online purchases that are held longer than some number of months. Now here is the important number that I want you to remember from this video. The annual recurring management fee is usually called an expense ratio. It's a funny term that you need to remember. It's the percentage of a mutual fund's assets that the investment firm incurs for all of its regular operating costs. The cost of owning mutual funds is not limited to their respective expense ratios. Transaction costs and market spreads are examples of additional costs a fund incurs every time it buys or sells a security. I only mention this because frequent trading is part of the reason that active mutual funds underperform the total stock market. Here's an example, the total stock market index fund offered by Vanguard. We can click on the Fees tab to find the expense ratio of 0.07% for this particular fund. All funds must publish this. If our total investment was only $10,000, then we would pay only $7 per year. This is excellent. They subtract that first and investors get what is left. With mutual funds, it's not you get what you pay for. This is the key point. You get to keep exactly what you don't pay for. What you pay as expenses comes directly out of your pocket. So let's scroll down and see if there's any other fees listed. This one has no sales charges. Down here we see that sometimes there's an annual fee for an account, but they point out ways to avoid this as well. These little percentages make a big difference. Back here they showed us how their expense ratio compares with the industry and how if reinvested, that could be worth nearly $2,600 after 10 years. To better understand the devastating impact of these costs, consider a 25-year-old who invests $100 per month in a Roth IRA until he is 65. The left shows the amount he would have earned using a historic stock market average captured with a low-cost index fund. The right shows the amount he would earn with the same gross returns, but a sales charge of 60 cents for every $100 investment and fund expenses of 2% per year. At age 65, he would have earned $210,000 less, and that difference would continue to get worse. Now, if future returns are lower, then these costs take an even bigger bite out of what you earn. Clearly, costs matter. Keep them low. Unfortunately, some 401k plans do not offer any index funds at all. In that case, look for the largest, most diversified funds with the lowest fees. Now, some of your savings will be in a taxable account. And guess what? Taxes are the third big cost that dramatically affects your return. We'll look at these in the next video. Find other explanatory videos, smart tips, and links to useful resources at financinglife.org.